Good day. This is the Elliott Wave weekly update on the Dow Jones Industrial Average, being recorded on Saturday, April the 19th at 10 a.m. Pacific Daylight Time. There aren't any changes to the very large picture that I'm now showing. And so what I want to do is just go and focus on where the changes have happened. So all the way up to this point, everything stays the same in terms of degree. And so this was an intermediate fourth wave. And so we're going from there. And I want to show that this is where some changes were made to actually show that the intermediate fifth wave completed at the February high. And then on top of that was the primary third wave. So the change comes from, let me just redo this chart. I'll go back here. The changes come here. That originally we saw it as the primary third, the primary four, and we were in primary wave 5. And if that comes through to be the way that it is, then we're finishing primary 5, then it is a cycle third wave. And that cycle third wave would pretend that we're going to come back down to that primary 4, and that would be here. So still, even leaving it as a primary third, with still a primary fourth wave in force, it's still the way that the labeling is, would suggest that the market is going to drop back to here within that fourth wave. Now, as I have discussed in the S&P, which is under the same count, it just seems that the market is probably headed more towards the lows that we saw in October of 2022, which in this case for the Dow is 28,660 instead of 7,033. Big difference. Now, the market is, particularly in just all of them actually, and trying to attach the Elliott to what it's doing, it comes down to degree. I find that I'm continuing to find that I'm okay with everything that happens in between. Let me just bring this down to my five year. So this is the October 2022 low. And initially I had put primary 3, primary wave 4 because of the size and because of the depth, because of how the market dropped. But upon review, it's like, no, so under the present count, it would suggest that it was a minor fourth wave. So it's adjusting degree, not the intensity, not the drop itself, just the degree. So in other words, in order to kind of put into place the intermediate third and fourth taking place in 2000, from 2000 to 2009, leaves open this much larger correction in terms of primary 4 in progress now. Now, if indeed we are following what Elliott tells us, that the fourth wave will find its terminus, its endpoint within the fourth wave of one lesser degree. And if we're dealing in a primary, that would take us down to intermediate, and that intermediate wave 4 is 2009, that low. But I think we may have a little bit of a difference. Now, I just want to tie this together now. The indexes, the S&P and the Dow, do stand a chance of getting down to that low. And how it would happen is that the stock, of course, the underlying stocks need to fall apart, need to really start to sell off, need to find that something is going to stimulate a much deeper drop. And while that's kind of in place right now, I'm not saying that this is the cause, but we're now just starting to get the hints on what the trade wars could produce, both on a Fed level in terms of the interest rates, so Federal Reserve, in terms of interest rates continue to be cut versus having to be raised because of inflationary problems and all the different things. We are seeing a lot of activity happen that would be in support of a larger decline in our equity markets. And part of that is the dollar. Now, it's all kind of posturing happening right now. And how the piece by piece is going to come in and fit into here, I believe is going to come through, and we're going to start to see it by the movement in the dollar, the movement in the bonds. Right? The bonds themselves are being sold. So in other words, there are traders, players, countries, funds, which no longer want to hold US debt because of the uncertainty of really what's going on, because of the uncertainty and just like, how do we know what actually is going to happen? How are these trade wars all going to play out? What we're seeing initially is that countries are walking away from the US, are getting out of their debt holdings, right? Don't forget, please don't forget that the US operates by selling debt. We're selling our debt. And right now, that debt ceiling keeps getting raised, but we're supporting it with how we operate and what the economy does. Even though our GDP is pretty high, our debt to GDP ratio is very high. But we're able to handle it until now. And so that's the thought. That's what's starting to happen, where countries such as China are like, well, we're not going to deal with this. We're selling. They're selling their long-term debt via the 30-year bond, the 10-year note. They're selling it. And that gets converted into dollars, and they don't want the dollars either. They're selling the dollar. There are other countries, there are other players that are just selling their dollar holdings. They don't want to. And they're renegotiating how they're going to pay for some of the international trade. So again, things are happening behind while the current administration tells us everything's okay. This is the liberation tariff, a liberation day. And so the thought is like, oh no, this is all going to work out for the betterment of the United States because we're going to bring all that business back into the US. Everything will be manufactured in the United States. Well, are we ready? Do all those factories, have they been retooled? Are they ready to just open and start producing all those things that we import here? After years of trade negotiations to lower the price of those products for these producers here by buying them or producing them in other countries. Well, that's like, no, not going to happen anymore. So the current administration does believe that it's like this is all going to benefit the US economy. Okay. We're not seeing any light of that. Now, add into all of this that uncertainty, the powerhouse called gold continuing to now trade above 3,300 after almost getting up to 3,400. And that's another market that I need to update and get an update out on, and I hopefully can do that. But these markets are becoming very, very difficult to attempt to factor in an imbalance of what really is going on underneath this. So what's contributing to that, I believe, is that we have the other powerhouse of what controls how our moves are produced and what produces them. And that is the options trading. And so here it's the options trading in the diamonds. It's the options trading in the 30 stocks that are in this index and how those levels do trigger and produce what we get. Now, let's update and go like, okay, we're entering into first quarter earnings. Okay, we got a hint from United Healthcare. Now, there's not necessarily attached to the tariff or the trade wars. It was attached to a law that was enacted which limited the out-of-pocket costs for Medicare and medications and pharmaceuticals for drug prices. It limited that out-of-pocket cost from $6,500 in some cases, maybe even $10,000 in other cases, depending on your policy, to $2,000. And that is what United Healthcare said was the primary problem and why they put out really poor earnings. And that stock dropped a lot. And it brought the Dow down 527. And that's against the backdrop that Eli Lilly had glowing. But that's pharmaceutical sales. So this is getting to be a dichotomy. How do we want to look at that? How do we want to factor it in? We have to continue to look at the market on a technical basis. I have to continue to think it's like, well, we have additional downside. So that is why I refigured the chart on a degree basis. So here, does the Dow have a possibility of dropping back to the 2009 lows? It does. If one stock can trigger the Dow to drop over 500 points, primarily one stock, what's going to happen when we start getting the other reports? What's going to happen when the balance of all of that? Don't forget, NVIDIA is a part of the Dow now. So 5.5 billion? Did you notice on Friday? No, I think that was just expiration. But it's like, okay, how do we move forward with this? What happens if those taxes, that additional tax that NVIDIA will have to pay for exporting back to China the chips, the AI chips, are they going to have to eat $5.5 billion in taxes? Maybe. What's that going to do to their stock price? What's that going to do to that market? What's that going to do to the other companies that may be selling to China or other countries under this trade war? So what really we're going to start to hear is what's happening to the underlying stocks within the Dow. And that has not been factored in. So as I continue to say, I think it'll be very interesting for these first quarter earnings. Pay very close attention to what CEOs and CFOs are going to be telling us. I doubt that the truth will not be masked because it's now on the line. And this, take your medicine, which could be a smackdown. And if enough of these large corps that are in the Dow start to show weakness, doesn't mean that they're not going to continue to make money, but they're not going to be as glowing because everybody's going to have to pay for this trade war. It isn't China. It isn't the European Union. It isn't Canada. And it isn't it isn't Mexico or every other country that's now have a tariff against it. It's us, folks. It's us that will be paying for this. So with that in mind, weekly chart. Here's the previous fourth wave that I think we're going to get back to, but that might just be a start. Okay. So I'm going to bring it down out of here. So here is primary wave 3. So intermediate 5, primary wave 3 complete. We're coming down. Let me go immediately just down to that daily chart. We're going to start to look inside. So I've got that right there at that high, which is 45,054, a slight failure over that third was at 45,073. So I put it here. And that's actually in the cash market, where in the other cash markets, we saw this as January, but we saw that February high, which is basically right there. We saw that produce a higher high in the S&P and in the NASDAQ. Not so in the Dow. So it ends in a small failure in the whole scheme of this larger count. So there, primary wave 3, intermediate 5, minor 5, minute 5. We start to come down, and what, if we're just working it this way, it should be intermediate wave A of primary wave 4. And so I've got it where if we're in intermediate wave A, I've got to be able to count the minor degrees. Now, two things. I could drop this a degree, which puts this in minute and not the minor, and puts a minute wave A. I can still have 1, 2, 3, 4, 5, which makes the larger whole primary fourth wave a zigzag versus a flat. That's major, okay? Because if I'm counting 5 down here, as I told you, there's the possibility in the S&P it's 5 instead of 3. The NASDAQ pretty much is cleaner as 3, ABC. So there's no way that I can change this around just now. In fact, the only way I can change it around is to kind of put this as A, and this is a B, and we're coming down in the C wave to form intermediate wave A. That's a possibility. But again, this has been very difficult. Why? Because of the flip-flopping and from the current administration. Oh, we're going to have higher rates. No, we're going to put a 90-day pause, which now is being investigated. So there's just so much going on that actually has far more deeper reach than I think we think. And so I'm going to leave it as is. And so what we got is 3, 4, 5. That wave 5 also ends in a failure because it failed to take out that 3, the low of the 3, and it's a little bit larger. That one's 36,549. This is 37,383, so it's about 900 points. So still pretty large. But the Dow has been flipping and flying 1,000 points pretty easily. So I'm allowing for that to be a failure. I'm putting the intermediate wave A at that low, and that sets us up for what we now got to go, what we see happening. So now I'm going to open it back up so I can start to add right now, if this is in minor wave A of intermediate wave B, which should be an upside move, I want to take a look at, okay, what can we expect for that entire B wave? And what I want to do is just put in this, and let me just go adjust it. I don't put it in ahead of time because we won't be able to see anything when I pull it out to those larger counts. All right, so we're going to leave that one and that one. We're taking that one out, and we're going to the one, which I doubt it'll get to. So under this count being 5 waves for A, we'd be looking for that B wave to maybe get back to 4217 and 42,017, or maybe up a little bit higher. I would not expect it to go up here into the category of being a flat. Doesn't mean that it won't try, but I think we kind of get stopped here to here, like 42.3, 42,000. The first one is going to be 41,079, which we've gotten close to twice. So now bringing that down to the internal. So that yellow is for the intermediate B wave. Now we got to come down and we want to take a look inside for what we got going on. And what I need now, I need the low of the minor B wave so I can then put in what I believe the C wave is going to look like. So let me come back down to the hourly. Now we can take a look inside this. So here we have, this actually should be, let me just change that color so that we're not being confused. It is the intermediate. And so here we have A, A, B, we're coming down in a C wave. Let's try to kind of look at this on the hourly chart. We have 1, 2, 1, 2, 1, 2. So we actually are in the C wave, which could come down. And because it's a minor B wave, it has the option of going irregular. That would put it into that irregular. One greater would drop it below there. And that's still just being a C wave, and then we get that, and then finishing a minor B wave. So we have minuet wave C to complete minor wave B, and the possibility that it's going to sink quickly. This is where it gets interesting. Because again, I'm considering the degree, and I need to fit that into the size of the pattern in force. Not the necessary, I'm not changing the wave, the labeling of the wave itself. I still believe it is a B wave within the larger upside B wave. So it's the internal B within the 1 degree higher B wave. So A, B, I think we are in the C wave, but the best I can get it is 1, 2, 1, 2, 1, 2. It just is not working out to go, okay, 1, 2, 3, 4, 5. It could, but that's going to suggest that could be one of C. Again, there's tons of possibilities. And so what we're dealing with is that's the initial decline that we got on Thursday. Here we have a little bit of a rally, but I think there's more. I do think there's more. So I'm more or less 1, 2, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. So if this is 1, 2, 3, 4, 5, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, that's one choice. There's so many different choices, but they all point to additional stronger downside before this internal B wave is over. So again, our initial support comes at 38,440. And then 1.618 comes in 36,987. Now, again, what could be behind it? Well, the unknown. We're dropping into earnings season. I am very interested and going to be paying close attention to what these CEOs, CFOs are going to be talking about in terms of forward guidance. The forward guidance was also dismal from United Healthcare. Other insurance companies, I can't imagine, the medical insurance companies, right? That cover all these Medicare Advantage plans. I can't see them doing anything different. Like, so someone's going to report a glowing earnings report? I don't know. I don't think so. So again, a lot of it could be just was overvalued. So we're just knocking all that out, bringing things back down to the real value, the real world. I don't know. And it doesn't, this trade war in between, now heading into earnings, doesn't present a positive picture for the near term. So I'm going to continue to look for downside. I have to let the market tell me, is it 1, 2, 1, 2, 1, 2? And then we get a 3, 4, 5, 4, 5, 4, 5, right? If I got 1, 2, 1, 2, I get a 3, 4, 5, 3, 4, 5 that finishes as 3, and then another 4, 5 to finish the C wave. So it could be irregular. I'm just going to keep adding these. If I got to go down, I got to add another one. Look where that takes us. And then see, this is the other thing that it starts to get interesting because on one hand, This fourth wave could control this one. It's not a fourth wave, but it should provide support above 38.40. So what are we looking at? What are we looking at? We're looking to just continue dropping this down. 2.618 brings us into this correction midway. And here's that other fourth. It's 28. So is this somehow going to be, well, let me show you one other possibility that we got going on, that I got to come all the way back down to that hourly chart, and we got to look inside here. This looks like 5, but I can, if I need to back this up, I put that A wave here. Somehow this all works into the 3, 4, and the 5, and that A wave goes here, and we have an ABC up, and that is the B wave. 1, 2, dropping in a 3rd, and 4, and a 5. That's the other alternate that I have. I'm just not employing it right now because it's truly not clear. There are too many possibilities of like, well, this could change, that could change, and we're seeing that simply coming all the news that comes out of the administration. What's next? They're dismantling department after department within our federal government. There's just so many things that we don't know that can affect this market. So here's all of what I got. There's a possibility that intermediate wave A is going to be here. And it is going to be an ABC, probably. If this has to be A, B, C, and then the A goes here, and that's A, B, C, and the B goes here, and we're dropping in a C wave. And I just want to show you, I'm going to take this back out to my daily, open this up, and now we're going to show it. If indeed it's down to here, and I'm just going to take a snapshot of what we'd be looking at for that C wave. Now, again, I'm going to just leave this as B, bring this back out to my weekly. Look at that. 100% brings us down to 32.23. 1.618 brings us back to 27, and guess where we are? Now, you want to tell me, it's like, okay, so how we want to look at this? It's very difficult. It's very difficult, and I'm trying to be as clean and consistent as I can in how I see the interior. But if we start to see the market just give up the ghost and break down, well, you at least get an idea that it could really just go. And that's going to be based on all the factors coming together to point to get out. And if we start to see a lot of change all at once, where the market, the earnings, and the trade wars, and the other things the administration is doing really come to a head, it could be get out. And that would be determined just by the wave count, actually. So again, if I have to put the A down here, that's the B. And what we got going on is 1, 2. We're in the 3rd. And this would just be the beginning of it. The beginning of it. Did I take that off? I didn't think I did. I guess I did. It could be disastrous. It really could. Right now, I got to leave it as is. But understand, the other thing that I'm telling you, when I go in and I look, and the only one I can really look at is the diamonds for the Dow, because that's what trades. This is the ETF on the Dow, and let's just start looking. That's 391. Well, it's not even that much. There's nothing on the call side. So you see they are buying puts. The puts, again, for coming up. What do they got? What do we see coming up? And we can just go down that list. More, bigger. So the put positions continue to say the puts are in demand. Calls aren't so much in demand. Let's go out to the May 16th expiration. We see the put being put in place. Not as heavy as we're seeing in the other markets. So the SPX might be covering a lot for the Dow, and we're just not seeing it. But that doesn't mean it's not happening. So again, I'm going to urge caution in, no, I got that. Sorry about that. And we'll see how this all starts to play out. Okay, I'm looking for a C wave down. That is more likely. And we'll see additional fallout coming from earnings. And now I'm presenting also letting you know there are those other counts. They are alternate right now, but they are in existence. And that would show a much greater decline. And I wanted to include that because we still, by what Elliott teaches, the fourth wave, a primary fourth wave, should find its terminus, its endpoint within the fourth wave of one lesser degree, and that is the intermediate wave 4. Whether I'm calling it, if it's primary wave 4 or intermediate wave 4, it doesn't make any difference. It's the fourth wave that we'd have to associate with it, and that's right here. So is that what we're looking at? We're wiping out all of the advance from 2009. Or we're getting ready the possibility exists of wiping out the last 16 years of advancement. Now, that would take care of a lot of things because it's going to take all the fluff, everything out, and then that could be our start over point. And we're just rebuilding. We would be in a rebuild situation if we got down that low. And that was primary 4, and primary wave 5 would be rebuilding. But then again, we get to do it all over again because primary wave 5, when it completes, is completing cycle 3. And then we're coming back down, likely again to the same area. So not a whole lot to look forward to. I apologize, but let's just see what happens in terms of earnings, in terms of tariffs and the trade wars, and see if that doesn't resolve, if something doesn't start to get resolved, which could present us with a little bit more bullish. Because even so, under this, if that's A and I'm looking for the B, this is primary A, minor A, looking for minor B with a minor C wave to come. And then that larger C wave down. So I'm telling you, there's a lot yet to come. So how deep can this go? And what does that portend to tell us about the count? I'm trying to present all the choices. But right now I'm going to leave it here because otherwise I'm going to go really too deep into what the possibilities are. So again, recapping, I'm considering this is a small failure within intermediate wave A of primary wave 4. We're in an intermediate wave B of primary wave 4. The alternate would suggest that this is wave A and this is wave B, and we're starting the C wave, an intermediate C wave down to complete primary wave 4. And that, as I just demonstrated, holds a much larger drop down to 27. And that takes us initially, that takes us inside here, takes us below this level. That would be the whole C wave. Does it take us inside the other? Man, I got to go all the way out to my monthly. It's amazing. It does not. 4.236 does. So a C wave, don't forget, a C wave can be just devastating. I'm already telling you that's what I'd be looking for. So the alternate count would suggest, woo, a lot. And that's the alternate, A, B, and we're coming down in a C wave. And you look at that. Look at how it's starting on our daily chart. Oops. That's not what I wanted to do. Look at how it's starting. Down. All the bars are down. So it's pretty wild. It is pretty wild. The weekly chart, regardless of that intervening rally, was straight down. Bear it all in mind. That's where I'm going to finish this. I welcome your comments. Please do. Don't be, just contribute to the conversation. Remember, we're all doing this together. Contribute to the conversation. If you want to tell me what a jerk I am about everything, that's fine. I'll probably delete you. All right. So that's the way I'm going to leave this. Our next update will be next week.